Good morning, and thank you very much for joining us. John Jenkinson along with you here on this Wednesday morning to keep you company and keep you informed as well. Also here with us is Rich Nelson, Allendale Incorporated in McHenry, Illinois. Rich, first of all, some overnight sales, and this is rather interesting in the face of the big story, which is China now saying that they are going to impose some pretty stiff tariffs on soybeans in particular. And it's a wide range of different items, but soybeans certainly in the target there.
Exactly right. So a full 25% tariff here on, of course, U.S. soybeans. This does include also corn, sorghum, and a few other products here. In fact, some forms of wheat as well. So on this end, this is a wide-ranging issue, but certainly in terms of the general impact, soybeans will be the one hit here today.
And it's interesting, Rich, we had overnight sales to report here first thing this morning. We see where USDA says 325,000 tons of soybeans sold to quote-unquote unknown destinations. Now that is a split delivery, 130,000 metric ton for the 2017-2018 marketing year, and another 195,000 ton for the 2018 and 2019 marketing year. Then there was another sale of soybeans, 129,000 metric ton headed for China, but that is for the 18-19 marketing year. So is this mixed signals then this morning?
I think in general, probably a few buyers may have heard the news earlier, or maybe have been concerned about some of these issues going on here. So either way, it's clear that a few Chinese buyers did jump in here and pick up a little product before this happened. Now, this will be something as far as an interesting impact for today's discussion. China last year bought about 62% of our soybean exports. So this will be something we can't quite ignore here, but we all know they actually won't be dropping down to zero purchases of U.S. products. So big question for us is what type of impact will this be on the China-Brazil relationship? And also for us on the U.S. side, will we be able to take some of their customers as they're supplying to China in a larger amount now?
So that is a topic in the trade then. Is there also talk that maybe this is just an initial reaction in the market?
You know, I think that's exactly right. Some people have suggested that maybe this market will come back maybe mid-morning after we're going to have a scary-looking opening here today. So that will be a discussion point. Obviously, we should be closing lower here today on the beans, but maybe not at this current level right now here.
All right, May soybeans on the overnight trade down 40 1/4 at 9.97 3/4. July down 40 1/4, and new crop November soybeans down 34 3/4 at 10.07 1/2. Of course, we'll see what happens when the day trade starts. Let's go back up and check corn, because Rich, you also mentioned corn is on that list as well, and corn was lower than this to start out the overnight trade, the low of 372. 379 1/4 was the last tick. That's down 9 1/4 cents. December corn down 9 3/4, 402 1/2. Let's find out what's going on in this wheat market here on the overnight trade as well. Starting in Chicago, May wheat down 4 1/4, 453 1/4. July down 4 3/4, 469 1/4. May Kansas City wheat down 2 1/4, 482 1/2. July down 2 1/2, $5.75. July Minneapolis wheat down 8 3/4 at 583 1/2. And the cotton market, May cotton down 252, 79.50. Didn't seem to have as much effect on the wheat market.
Exactly right. I think at this point, many people are saying maybe this won't have as big an issue for wheat simply because we haven't been a major, or they haven't been a major buyer for us on the wheat side here in terms of percentage basis here. So this will be something we'll have to see, but certainly with our concerns about the weather situation on wheat, you can probably also argue that that might be maybe a more important issue to look at here in the coming days.
All right, Rich Nelson here with us, Allendale Incorporated. When we come back, we'll talk about the livestock trade next here on the Market Day Report. Stay tuned. Rich Nelson, Allendale Incorporated, is on the line with us from McHenry, Illinois. All right, Rich, now let's talk about this livestock market here and how all of this ties in. Are any of the United States, we've already discussed pork, that was one of the big topics at the beginning of the week. What about beef? Is it also now part of this tariff talk?
In fact, they do have both frozen as well as fresh beef from the U.S. on this list right now. And This would be a good question for us. So we know the market way overreacted on the pork side to the minimal amounts of product we send to China here. Big question for us is what will it do for us on the beef side? We only have a 0.4% of our total exports this year lined up for China. They're almost not even a buyer, but will we have some lower futures prices today because of some type of psychological overreaction here?
You talk about the lower futures prices and how that ties in psychologically. That's an excellent point. But, you know, yesterday we had a big sell-off again in the cattle market. We actually even saw some cash trade, anywhere from $3 to $4 lower, according to the numbers that we saw here first thing this morning. What is the trade saying this morning about being under that $100 mark in a couple of those live cattle contracts now?
You know, it is a concerning point here. I think the market is certainly having a big wake-up call right now for the potential size of this, I'm not going to say wall of cattle waiting for us here in April through June, but this is an issue. And we have to remind here that we have some serious problems with profitability here now. With many of these cattle coming out in the next few weeks, we'll be looking at 123 to 126 break-evens. So we do have some problems right now, and certainly on the futures end, market's not stopping here just yet.
How much of an opportunity is this for buyers to start stepping into this cattle market, though?
I certainly think this will be a big issue, especially as we price so much of this coming supply problem. We've already priced a good chunk of this in with this harsh break in futures here. So on this end, I think you will have a lot of people questioning in the coming days or weeks whether this market is perhaps overdoing things on the downside here on the cattle side.
Big losses yesterday, too, in those hog market, particularly with that expanded limit in that one contract. So could there be follow-through on that today, or is this hog market kind of flushed out of all of the negative news now, or do you think that this new negative news could also affect the hog market again today?
It obviously should not, because we don't have anything new against the pork side, but I think just in the general frame of the bearish mindset this market is, the horrible tornado of poor psychology, you could say, in the pork market, I think we probably can argue maybe some lower prices here today. Realistically, this market is quite undervalued, but like we mentioned, this is a psychological issue more than an actual fact-based discussion on the pork.
Rich Nelson, Allendale Incorporated, here with us, McHenry, Illinois. Thank you very much, Rich, for the insight. We'll be talking to you folks later. And we're going to continue to watch all of this and keep everybody up to date. Mark,